No.
There you go. You are live.
We are. There we are.
Yeah,
It always
like-
takes 3 seconds longer than you want it to. Good evening, everybody. I'm Mike from Avocado Property. Below me, I'm the gruesome twosome, frankly. It's all gone a bit pixelated for Matt. Probably doing us a favour. Matthew Pulford, Avocado
Thanks
Woken.
very much, Mike.
Good to know he can hear us. I was just
Love you
testing
too. Yeah.
Just to see. And behind Matthew is Matt Barrell. Somewhere. There he is. Another one of the Avocado partners working at Matthew's office today. And to my right, Stuart Bock, Avocado Maidenhead. So this evening, quite a big topic in the estate agency world. There's a new mortgage product being launched by the Skipton Building Society, who many people might not know, but they're a massive building society that just happen to also own the UK's biggest estate agency, the Connells network. They've launched a brand new mortgage product that I don't think the industry's ever seen before. That's caused a bit of a stir. It's caused my mortgage broker to book in something like 20 first appointments with people who are renting. And it's 100% mortgage, which means no deposit for your mortgage, aimed specifically at tenants. So, gents, we've dragged you on here because Matthew, for those who don't know Matthew's history, former director of a multi-chain lettings agency, and Stuart, actually himself, investment landlord, and does a bit of lettings through Avocado in Maidenhead as well. So two absolute lettings experts on with me. Someone needed to help to talk about how this is going to affect tenants, how this is going to affect landlords, and potentially the rental and the sales market. Stuart, what do you think of Skipton launching a mortgage specifically aimed at tenants, giving 100% of the cash with no deposit?
It's a positive step. I would say it's probably step one of the mortgage changes. I would hope. So I've had a little look at what that means if you currently rent in Maidenhead at Bolters Meadow. So there's 250, 300 flats there. The rent is about $14.50 a month for a 2-bed, 2-bath. The criteria at the moment on this very first version doesn't mean that the tenants there could buy one of the flats there. But when version 2.0 comes out and the stress tests might be a little bit better, hopefully more people will be able to use it. I think initially it's going to help the second-hand flat market in Maidenhead. I don't think it'll make a difference to the housing market in Maidenhead. And a bit like Help to Buy and Part Buy, Part Rent, there'll be some people that are real winners out of this, but it won't be for everyone.
Matthew, initial thoughts on 100% mortgages? I think the phrase PTSD was used when you popped into the office earlier.
I always feel like whenever you say 100% mortgages, you always think Northern Rock and all of the issues that drove people to be in negative equity before. I think it needs to be managed very, very, very carefully, because suddenly you get a load of 100% mortgages that happen. Let's say, for example, you have like Stuart says, let's say it's mainly flats, and we all know that flats, while some have benefited from capital growth over the past 10 to 15 years, some can struggle when there's so many more that are built. You don't want to suddenly be upside down on your mortgage when you've got after a 2-year product. So I think it needs to be very carefully done. However, saying that, I applaud it. I think it's great. I think the opportunity that it's giving renters to be able to not pay 100% interest, in truth, to their landlord for the money that they're spending on their rent, can go towards building up equity in a property. And we all know that that's what everybody's dream is. I think it's a big step in the right direction. I do agree with Stu, though, that there will be 100% mortgages version 2, and then there'll be 3, and then there'll be 4, and then there'll be 5. But I think the fact that it's even being introduced as a positive step in the right direction, whether it's right here and now, probably not. and people need to go through the application process to see how it really affects them.
Yeah, I think that's the first thing. Is there's always a question mark above my head: is how many of these mortgages will actually go through to completion? And the cynical side of me says, is this a publicity stunt or is this a real product? Because we've seen lots of different sort of brand new mortgage products in the past, and a lot for landlords, government schemes for grants, which frankly no one ever claimed a penny on, despite there being millions and millions of pounds. The Green Deal, one of them that comes to mind. I've never met a landlord who's claimed any money on the Green Deal. If you are one of them, pop a message in the comments and you can tell me exactly how it works, because I've got absolutely no clue. So
I'll tell you what the interesting thing from it, I think, will come from this is how much people's mortgages will then change from based on what the rent is that they're paying now. And I think that where they probably dovetail quite nicely based on the fact that rent, with interest rates having gone up, if you're a normal buyer and you put in 20%, your loan to value is 80%, your rent versus your mortgage is probably a very similar monthly amount on your repayment, I would expect. If you're borrowing 100% at a 5.5% or whatever the rate is, are you going to suddenly find yourself buying a lesser property to be on the housing market compared to what you're used to? Is the only other thing that I can think of that would potentially be a more of a change for the buyer's expectations or perceptions of where they're going to end up living rather than just having a property.
Yeah, I think the very basic maths that my broker gave me was, if you move from renting to owning on this scheme, you're likely to either lose a bedroom or move from the really smart end of town to the normal end of town on an equivalent. And I think, Stuart, I don't know if you did the maths on the property that you mentioned earlier to sort of show the difference in payment.
Yeah, I mean, on the 2-bed flat, on an average, they were about £100 a month short for being able to get the mortgages. But I think the problem is with our high value areas where we are, like the norm doesn't work. And that's why we'll need a version 2.0. We'll need whatever you've been renting plus 10% allowance, so you can just take that extra step. But yeah, I think it'll be a very good for some people, but I think it's not going to affect 100% of first-time buyers. It might affect 2% of first-time buyers.
But what I think it does is it gives people the opportunity, doesn't it? Whereas before they haven't had that. They've had to find 5% at least on a place at 300 grand, which is still £15,000. And when you're spending the best part, the thick end of 1,400 quid for a 2-bedroom flat in any of our areas, how can you ever save 15 to 20 grand plus your legals and bits and pieces to be able to do it? So I do think it's a great step in the right direction.
If you also think of like the changes over the last 5 years, like first-time buyers can now buy stamp duty free up to a much higher level. Like 10 years ago, you didn't have this product and you had to find stamp duty for what, 5 grand, up to 300 maybe. Whereas today it's 0. So yeah, exactly. In that sense, it's never been a better time to be a first-time buyer with a 0 deposit.
Yeah.
The incentive's definitely there. Obviously, the property's more expensive. The interest rate's higher than it was 5 years ago. We all knew interest rates would move the dial at some point. One big thing I've been speaking to brokers about is interest rates. Obviously, the Bank of England base rate has gone up, I think, 11 times in a row now at the last count. Interest rates seem to be pretty stable, though. And the big thing that my broker wants me to say every time I do anything is that a fixed mortgage rate, the initial deal that you get on with your mortgage, which you're likely to then switch and fix again and fix again and fix again, very little to do with the Bank of England base rate, and everything to do with the actual cost of borrowing for banks, which is based on what's called the swap rate. So don't get sucked into BBC News about Bank of England base rates going up, making mortgages unaffordable. The only people who are affected by Bank of England base rates are those who are on something called a tracker rate, which tracks the Bank of England base rate. And for the last few years, the majority of people who are taking out mortgages will have been fixing those, knowing that interest rates were going to go up. So the number of people affected is actually a minority. And the swap rate, the rate that banks lend money to each other, has been reasonably low, reasonably unaffected by the Bank of England base rates. So we're still in a really, really good place. And we'll talk about house selling stats very, very briefly whilst we're talking about buyer demand and buyers' ability to buy. We're selling houses at a ratio of 3 houses sold for every 2 coming on the market during May. That's over quite a wide area, that avocado is spread. I know Stuart, Matt, you're both right in the middle of the patch. Is it the standard summer market catching fire, or is it something else?
Do you want me to go? I think it's a build-up of reassurance in the buyer market. I think that where towards the end of last year we were finding ourselves in this real period of flux where we went from 2% to 6% to maybe even looking at some mortgages at 7%, and then we're back down to 5%, and then we're back down to high 3s, then we're up at 4s, and now we've seen this consistency based on the swap rate being what the swap rate is, not like the Bank of England base rate. Suddenly you find yourself with buyers being aware that this isn't something that's changing tomorrow. We're not suddenly going to see 4.5%, 5% suddenly drop down to 1% in 3 months' time because the Bank of England base rate is still going up, so it's still going to have to be sustained at a certain level. And I think there's confidence that's come in. I think the people that have been there sitting on the fence over the past 2 or 3, 4 months to see what happens, so suddenly thought, I need to buy somewhere, so let's go and buy somewhere. And the mortgage rates aren't changing, and nothing's changing, so let's jump into it. And they've obviously been more cautious on what they're spending, which is the reason why house prices haven't increased, but the buyer market there is so much better because they're now just going, well, I'll tell you what, I want to buy somewhere, I need to move. It's often a need rather than a want now. I need to go from a 2 to a 3 because I've got a growing family, or I need to downsize from my 5-bed detached house down to a 2-bedroom because I don't need all the space because it costs too much with the fuel bills. So I think it's a build up of time. I think it's a general busier period of time anyway that we get post Easter, and I think that it's great. It's certainly very good in Wokingham.
Yeah, I've seen the stats.
Yeah, me too. I look at them.
It's unbelievable. It's listed and it's sold. It feels like 2 summers ago again.
Very much so. Yeah, very much so.
Stuart, what about yourself on the Crossrail line there in Maidenhead?
Yeah, I think that the penny's dropped here now with the renters, that although it's going up 0.25, that's the equivalent of 1 more month's rent. So if you don't buy for an extra month, that's countered the increase.
Yeah.
And like I did an open house at Clare Road on Saturday. It had 13 people view it. The majority of people were in rented. A couple of people mentioned the interest rates because they wanted to use it as a bargaining tool to get the price down. We obviously didn't sell it to them. But, the majority of people then realised, I still need to buy. I'm paying 100% interest to my landlord. Like, why wouldn't you buy now? But, I think our market here is a mixture of overpricing by estate agents versus a lack of stock. So therefore, people are paying a good rate for them. And some people are very confused. Like the Clare Road, she was on 75 grand higher before, unfortunately. But she'd never had more than 3 viewings in a day, and she'd never had an offer. Got her on at the right price, 13 viewings in a day. Ended up 6 offers because we had more today. But if the property's priced right, the interest rates are kind of irrelevant. But people will want to buy. So, yeah.
Whilst we're talking about people obviously borrowing 100% of the house valued, what do you think your finger in the air average is for people who are buying the properties that you're selling, for the amount of deposit against what they're borrowing is?
15%.
So a lot of first-time buyers, Maidenhead. About yourself, Matthew?
I'm just having to think back to the last few that I've sold. Mine's stronger than that, probably at least 35%, I would think. There's a few cash transactions that are going through at the moment, which probably bolster it a touch. So yeah, somewhere about that, maybe even close to 40 in truth, because it seems to be a lot of people that have done very well to save cash over the past couple of 3 years, and they've now suddenly got the money in the bank to be able to put it in, and they see the value in putting that against the mortgage, not paying to pay the lower interest rates.
Yeah, I think it's an interesting contradiction between Wokingham and Maidenhead. Wokingham being probably a slightly more older clientele, slightly more families, that kind of thing, compared to a Maidenhead market, which is more of a commuter market, closer to London, close to the airports, a lot more workers, shall we say, going in and borrowing 85% of a house value on an estimate, that is. If you're borrowing 85%, you're not scared of interest rates. You're not scared of the market. You're doing it because, like you said, you want and need something. So it's an interesting mark. Sanjay's popped up with a question. Good evening, Sanjay. If buying long term, aren't mortgage rates now irrelevant as you can refinance in 2 years?
Yes and no. I think there's a lot of people that are looking for some level of security at the moment with the interest rates where they are, and there's a lot of people more opting for 5 year rather than 2 years. So I think interest rates do come into it, because obviously when you're borrowing at 5 years, what was the rate that came out by Uncle Dave the other day? It was like high threes, wasn't it? And then I think it was mid fours for something for a 2 year period, and you've got obviously a setup fee to factor into that. So if you take into account 2.5 lots worth of setup fee, which are often about £1,000 each time, you've got £2.5 grand worth of cost to add in to the extra on top of the paying a higher interest rate. So I think that you factor that all in, and everything suddenly looks like it's more sensible to do longer term rather than shorter term.
I think the arrangement fee hits the nail on the head from that point of view. Arrangement fees, showing my age, were about 200 quid, and then there were 500,
and then there were 999.
Yeah. Now they're 2%, 3%, which is really it's going to encourage people to do a longer fixed term to avoid having to pay that fee again in 2 to 3 years, and either have to lump it on the mortgage or find it in savings. Definitely. Couldn't agree with that more. Moving on, rentals. Let's talk rentals. Tenants. I've got a real empathy for tenants at the moment. Obviously, the Skipton does, because they're trying to help them out by providing new mortgage products. But you guys have both listed and let properties in the last 2 to 3 weeks. What are your big tips for tenants if they're to jump the queue and be the person out of the 6, 7, 8, 9, 10 offers that you get on the same property on a Saturday afternoon, Stuart?
Make it easy for the estate agent, because if you make it easy for them, they're going to do it quicker for you. Like, have your ID ready, have your income, have which HR department you need to contact to make sure they got the job, your last landlord's reference. So I had a property in Cookham. I took it off the market because unfortunately we found a crack in the floor. Lady knocked on my door the day after I took it off. She goes, "What happened to the rental in Cookham? I want to know." I was like, "Oh, it's got a bit of a crack. We're going to get it fixed." "I want it." "What do you mean you want it?" "So I want to go view it." So we took her there last night. She doesn't care about the crack in the floor. She understands the landlord will get it fixed whilst her being there. She's got it. Very
so
random.
That's a case of being
persistent.
Absolutely. Yeah.
And got some other tenants, they'd lost out on through other agents. They'd got phone calls on the day cancelling the viewings, but their sister-in-law had found a property through Beat the Portals, got it over to them. It didn't even hit Rightmove. As soon as it did hit Rightmove saying let, a few people inquired about it. It's let, it's gone. So you got to kind of do everything to get it. bottle of gin here, there for the agent. That'd definitely help. And a little voucher. I know you can't do it for sales.
You see Stuart Wednesday. He's like, come with a bottle of gin, and we might be able to put you to the top.
Put you to the top of the pile.
Yeah. I think it's a touch different, but not immediately different to what Stuart says. I think there's a lot when you're looking at rental properties now. There's not a huge amount of people that are doing it from a buy-to-let perspective. I think it's because I don't think the variables are there unless you've got a serious amount of cash to be able to put down because the mortgage rates are high and the stress test is strong. I think that you get a lot of people that think, I tell you what, I've got a job move to wherever, and they're looking to rent out their primary residence that they've grown up, they've brought kids up, they want to rent it out as a family. I think what actually goes a long way is when you're presenting an offer, don't just go, "Hi, it's Matt Pulford. I'm going to offer £2,500 a month, and I want to move in." Then tell us a little bit as to why and what you're going to do to make sure you look after their home, because I feel like that goes a long way. It gives a good explanation. And don't make it up, because it'll be obvious if you are. But try and be truthful. Try and tell a bit of a story as to the reasons why it should be you, because a price and a date, don't get me wrong, are great, but I think a bit of a story and the reasons why are often the bit that will give you the edge.
I totally agree with that. You're unlikely ever to meet the landlord, but the landlord is also likely to not be a professional landlord and will empathise with someone who is either similar to them or they see a situation in. So I viewed a house to buy not too long ago, not too far from where I grew up, in the same school catchment from where I went to school. We actually bumped into the owner, had a lovely chat, and turns out she knew the local scout leader where I went to scouts 25 years ago, and we knew all these same mutual people. And I've got no doubt that if I had wanted to buy that house and I'd put a reasonable offer in, there is no doubt she would have sold me that house, because she wanted me to buy it, because I was a local and it was round the corner from my mum's, and I used to play at the cricket club over the road, and all of the links that made her emotionally attached to me and potentially me to the house. It's just a shame it wasn't the right house. And I see the same for lettings. Have a personal statement made out and email it over to the letting agent, so the letting agent can tell the landlord why you want the property and why you're going to be a good tenant, because you're only really likely to be there for 10 or 15 minutes. Pop it over to them and say, this is why we want the flat. Here's 5 reasons why we'll be the best tenant, because we're going to stay here long term, because our kids are in the school, because we're connected to the community, because we like the development. Whatever it is that puts you potentially head and shoulders above other people, so the agent can use that in your favour to secure you the property. It's a little bit more work, granted, but it's well worth it.
Such a difference. Makes such a difference.
It makes my job easier if I know why someone wants a property, and I feel like I can trust them, and I can feel like they're connected to something. It makes me trust them a whole lot more. So I'd absolutely encourage all tenants to do that, so people have a good understanding. And even furthermore, obviously, if you're renting through Avocado, you're going to be meeting the person who puts the offer forward. If you're renting through a big corporate agent, you're likely to meet one person. Someone else will have listed the property, and someone else will put the offer forward. So there's sort of 3 different people who you just need to get your point across to. So have that personal statement or that explanation ready to hand over to anyone who's willing to listen to secure you that property. Gents, let's talk about the market. What have we got going on? We're coming up to half term in the summer term, and I'm pretty sure today's the first sunny day I've seen. Matt's obviously not convinced still. He's still wearing the hoodie. Either that or he's got really good aircon.
I've got good aircon, but I thought I'd at least come somewhat branded for the chat. So yeah.
So what's going on in the next 7 days in Wokingham, Matt, that people might want to know?
So we've got some listings coming on. We've got a nice 4-bedroom coming onto the market at 625. We've got another 2-bedroom coming on at 375, which looks great value for money. We've got 10 viewings happening at a house that listed a couple of 10 days ago. Good process. That's got viewings. We'll probably sell another 2 or 3 this week, I'd expect, on top of the 8 that we've sold so far this month, just to drop that in there. It's all looking rosy in Wokingham, in truth, looking really good. Lots of, and the benefit, and I talk to Matt about this quite regularly, the benefit with Wokingham is that they've always got lovely people to deal with, like really straight, they play a straight bat, and they just you just know how to deal with each other, which then just makes the process much smoother and much easier to manage. But no, lots going on. You'll see some more instructions and certainly some more sold boards up soon, I'm sure.
All about how we were brought up, isn't it, Matt?
Ah, totally, mate. Yeah, absolutely. 100%. You know that.
Stuart, not from Wokingham.
Yeah. Minutes Council Road in Maidenhead. Yeah, thank you.
What's happening in Maidenhead in the next 7 days?
So the Radcott auction property is now completely refurbished and ready to get back on the market. So that'll be going live next week. So that's a 2-bed, 360, 350. Great first-time buyers, great for landlords. It's an EPCC. Got the best apartment in Cox Green coming on the market, hopefully next week. For a client
the best apartment in Cox Green.
Yeah, it's behind this nice gated development. There's only, I think, 9 or 10 in there. It's just around the corner from where I live, really, like high-end area.
Reason why. Yeah.
But the owner's renovated it. He bought it a few years ago, so that's an amazing flat. Potentially, that flat would then buy another house through me, and possibly I'm getting a phone call after this about maybe a 5-bedroom semi coming on in Cox Green, and they want to buy a bungalow through me.
Wow.
So the story is, if you're looking in Cox Green and you're not registered, or if you're not registered on Stuart's Heads Up registrations, or you're not following his Facebook page, you're likely to be 7 days behind a whole load of people who are.
Mm-hmm.
And the same goes for Matthew, who's listing really, really good properties there, starting under 400,000, which in Wokingham now is beginning to become a bit of a rare sight, I would dare to say. So very, very busy. Chaps, next time and through next week, we're going to be talking about the Renters Reform Bill. We're not going to get into it this week because I don't want people to hang themselves. But if you're interested in the Renters Reform Bill, which will change being a landlord forever, then stay in touch with our social media, because Andy will be releasing a blog, some videos, and a podcast on the subject to explain what's going on, when it's going to go on, and how that's going to affect you. So that's a little plug for the various different mediums that we contact people on. But gents, as ever, thank you for joining me today, and we'll see everyone again Thursday night, 6 p.m.
Nice one. See you later on, everyone.
Yeah.